I'm going to try a new trade. Wish me luck. So here's the idea. The trend is down. I've been following the DAX for the last while. I've been saying that I expect the markets to crash in September, October. I expect them to fall a lot. Okay, so I'm just keeping it simple. So here's the 20-day moving average. I'm saying the market's down because it's below, so the trend is down. I'm going to zoom out a bit to get the bigger picture. So it's gone up and now it's falling. Don't catch a falling knife. We've no idea where it's going to bottom. So what you don't want to do is be long and hope that it'll turn around, because it will burn you out. It'll fall and fall and fall. Then you'll reluctantly have to sell at the end when you're nearly out of money, and that's when it's going to turn around and go, if I'd only held on, I would have made a fortune. But it doesn't work that way. So what's the strategy? Well, I'm just looking at the 1 day one here just to get a picture of, a bigger picture of what's going on. But this is a day trade, and this is a breakout trade. So here, and I just came up with this myself. Maybe loads of people use this and it's standard stuff, but I'm not doing it because I read it anywhere. I'm doing it because it seems to make sense. So here it goes. The idea is that the trend is down. So what I'm going to do is look at the range it's been in. So I'll say, today the range is around about here. The top being 9,700, bottom being 9,550 or 9,500, depending on whether you believe you're only bothered about the main body of the candle or you care about the wick. So here is the algorithm, and then I'm going to see how it does. And at this stage, I don't know. The idea is that if it breaks the bottom of the range, the market's falling. And I want to be short that market. If it were to break above, I'd be tempted to be long it. But in this case, I feel that the market's going down, so I don't want a part of that trade. When the market's falling, I only want to have short trades. So the idea is that I have an order at 9,550. Oh, sorry, at 9,000. So the idea there is that is a filter. That will only be placed if the market smashes through the bottom of the range. So if I go short at 9,500, I feel that the market is falling. then I put in a stop loss. So if the market were to turn around and go back again, I'll lose €50 if I had a position of 1. So stop loss there. Take profit, I'll say 3-to-1 ratio. So I'm looking for €150 profit. I'm risking 50. So the idea here is that, the market's moving around because it's already fallen. But if it were to fall down to this level, it would have made the next leg down. So let's go back a bit. So say you were in the market here. That seems to be the bottom. That seems to be the top. So using the same method, I'd put in an order there. I'd be looking to sell at 10,000 and take profit at 9,850. Well, it actually fell 200, but I would have exited here. When it bounced back up, it didn't go 50 above. It didn't go 50 above. So, of course, if I had entered there, I would have exited here. So, what happened here wouldn't have mattered. But that method, how well, as we've been talking about backtesting, how well has that done? So if I look at the previous one, I would have sold at 1050 or entered the trade at 1050, exited at 10,900. So I feel that the chances, I feel that I like this trade. It's not all about just tomorrow. It's a trade that I want to be making on a regular basis in the current market, because the market seems to be very volatile and it seems to be falling. Note, this is an important note, I'm not making this trade during the day. I'm not making the trade during, so the markets wake up in the morning and then they make their main move. During the day, the market's moving all over the place. So, if I were to enter the trade, if I were looking at this and go, oh, I'm going to go 50 below, then I'd enter the short trade here, it would go up and I would lose the money. I don't want to enter this trade during the day. I feel that this algorithm should work in the evenings, after the markets have processed the news of the day and they've basically calmed down. Then tomorrow morning, when the news flow begins, since the trend is down, the chances are the markets are going to keep falling. And since I have the 50, since I've got a nice 3-to-1 ratio, things should be in my favor. So we'll see how that goes over the coming while. Oh, one more thing, just on the breakout, and why I've used the 50 thing there. You might have a range, say you had a range between here and here. Okay, so 10,000 and 9,800. It's tempting to enter the trade the second it breaks out of that range. But it's not that simple, because often that'll give you false signals. there'll be false breakouts. So when it breaks, loads of people will go, oh, I'll get onto that, but actually that's a losing trade, and it turns around and you take your stop loss hit. So beware of false breakouts. It's the ratio of how many false breakouts you get to how many true breakouts you get. That's going to determine whether that approach makes you money in the long run. So now it's all about waiting and seeing whether the markets are going to be in my favor or not. So fingers crossed.